A warm welcome to the Risk Reversal Podcast. Guy Adami, always joined by the great Dan Nathan. By the way, you had a great conversation with Packy McCormick.
I did. One of our first guests on the Tape podcast going back to 21. I think he's a brilliant thinker. He's been all over generative AI and some of the disruptive sort of situations going on. We hit Tesla. We hit a lot of the big, hyperscalers and a whole host of other things. So stick around for that conversation. I really enjoyed it, Guy.
Well, not boring was the Knick game last night. They had, I think, NBA teams were 970-0, leading by 14 points with 2.5 minutes left in a playoff game. Now they're 970-1. And not boring also is U.S. stock market. And I want to start with Jamie Dimon because for the last couple of years, this is somebody that's been extraordinarily measured in his tone. I would say he has been less than optimistic. And now he's talking about the renewed risks of stagflation here in the United States. And it's playing itself out right before our very eyes in a number of different things.
Yeah. And, the word stagflation is not something that's been used a whole heck of a lot, despite the fact that we had that really bad Q1 GDP print, which was kind of explained away by all the imports in front of, expected tariffs. But when you talk about deflation, and, you've been saying this is pesky and persistent, even though that we have, 2.3% was the CPI last month. What I find interesting, Guy, is that go back to June of 2022. I think the CPI was 9.1, right? The highest reading that we've had, I think, in decades. Yeah, I think you have to go back to like the 70s or so. Fed funds rate at the time was maybe getting up above 2% or so. So here we are, we have a 4.5% Fed funds rate. The CME Fed funds tracker is not pricing meaningful cuts until September. When I say meaningful, like the probability of a 25 basis point cut. And here we are, despite the fact, I just look around and I look at the S&P 500 at 5850 and I say something is mispriced here. That's the only way I'm thinking about it.
Yeah. And what's interesting, and this is a quote from Jamie Dimon, I don't agree that we're in a sweet spot. You hear people talk about all the time how the market's in a sweet spot, and he does not agree with that. I agree with Jamie Dimon. We are anything but in a sweet spot. And he talked about the Federal Reserve doing the right thing by sort of holding firm, and I agree with that as well. But one thing that hasn't been holding particularly firm are U.S. 10-year yields, which everybody got concerned about a few weeks ago when we had that huge spike to 4.5. The president came out the next day and talked about an interview he saw with the aforementioned Jamie Dimon and Maria Bartiromo. The bond market took a few days of sort of, I guess, their concerns were assuaged, and only to have yields now go north of 4.6%. And I think more and more people are going to start to come to the realization that, wait a second, the bond market is telling a story. Japan just had the worst bond auction they've seen since 1987. So a lot of things globally here that are playing into the bond market. And I don't think people fully realize the implications of higher yields. Doug Cass talks about the equity risk premium. I think David Rosenberg has been writing about it. We've been talking about it. But you have razor thin risk levels right now in terms of what the market seemingly is pricing in.
Yeah, and so 24 hours ago, before Jamie made those comments, we were talking about an 18 VIX. While it didn't melt down to the mid-teens, as you might have expected, as we were a few percent from those prior all-time highs in the S&P 500 made in February, but the fact that it was sticking around, and we made that point on many occasions over the last couple of weeks, it kind of speaks to what Jamie's talking about. He's talking about a level of complacency. The other thing I'd say about 10-year Treasury yields here is that, yeah, we've gotten back to that level where, Trump and Bessent and all those folks got really nervous. I guess maybe it was the speed in which we went to 4.5. But I think the point that you're making right now about Japan, it's not just here in the U.S. We are seeing pressure on treasuries, on JGBs. We're seeing this upward movement in yields. And, it brings me back to the MOVE index. And, we've talked about this. This is like basically the VIX for the treasury market. And it got as high as 140. And that number might not mean anything, but it was trading at, 95, at the highs of the stock market when we saw the 10-year yield, much lower at 4% or whatever. And now it's trading at 102. It looks also very complacent, the way in which we saw the VIX over the last couple of days. So I think that's something to keep an eye on. If you start seeing that inching up, and at the levels where the 10-year treasury is right now, I think it's 4.59, that would be the thing. I think alarm bells would start going off across risk assets.
In the wee hours of the morning, I think part of this is what happened last night. The House passed this tax bill. It's going to go to Senate now, but it narrowly passed. But if you look at the numbers, and depending on who you listen to, over the next 10 years, it's going to add approximately $4.8 trillion to the debt. Now, the optimists will say we will get growth on the other side to sort of offset that. That remains to be seen. But I think one of the reasons that yields continue to go higher is what we're seeing sort of on the debt front, and it continues to grow. And it is a confidence game. And not only are yields going higher, which typically means the dollar follows to the upside, but yields have been going higher, and there's been this reacceleration to the downside in the US dollar. And I absolutely think that's something that I know we've talked about, and it's definitely worth watching.
Yeah, so talking about confidence games or just con games, look at Bitcoin. It's making a new all-time high, 111,000 right here. It's rallied, guy, 50% off those April lows. And so this is one of the things that is interesting to me is that the dollar in early April was going lower. It was breaking levels we hadn't seen in a couple years, but also Bitcoin was, right? And gold was making highs, and we were highlighting it at the time. So wait, what was the divergence between gold and Bitcoin? Well, Bitcoin is just a correlated asset to the NASDAQ, right? So the NASDAQ was down more than 20% at that point. And, you saw Bitcoin sell off from, I want to say 100,000 down to like 75, 73 or something like that, filled in that gap going back to the election. And you look at this rally that we've had right now, despite the dollar, not doing a whole heck of a lot. Now, you would say that weak US dollar, strong Bitcoin, but to the extent that it's done right now, and now it's massively outperforming gold over the last couple of months. I mean, this is something that to me also should get your antennas up, because I don't think it's bullish for many other risk assets.
Yeah, I agree with you. And, Bitcoin clearly has a bullseye in terms of what people are looking for. And MicroStrategies continues to add to their position. And, at all-time high, Michael Saylor looks like a genius. By the way, we're going to get him on the podcast in the next few weeks, so stick around for that. But the other thing that seemingly has a bullseye is Apple in terms of this current administration, and the hits keep coming. And listen, there are a number of reasons, in my opinion, to be bearish of Apple, valuation being one of them. But the other is the fact that, there's seemingly a problem now between President Trump and Tim Cook for a myriad of different reasons.
Yeah, great headline. I think it was in the Wall Street Journal or maybe Bloomberg, but they said that, Trump's little problem with Apple is a huge problem for Apple. You know what I mean? It's basically, he's basically suggesting that bring the manufacturing here, don't leave China and go to India, that sort of thing. So it'll be interesting to see how this plays out. We've talked about this a lot over the last couple of years, really going back to the first Trump administration. I mean, Tim Cook has been, really to perfection, been able to play footsie with President Xi and President Trump, and throw Biden in there too. He's gotten everything that he's wanted from the manufacturing standpoint, from the demand standpoint of Chinese consumers. Obviously, they own the high-end market here in the U.S. and in Europe for smartphones. But this is something that this is not going to go away in the first few months of the Trump administration. When he gets something under it, you know what I mean? Like, he's going to keep pounding on this sort of thing. But I think at the end of the day, nobody wants $2,000 iPhones. You know what I mean? And people here in America don't want to make them either. And I think that's like one of the most important points. And it seems like that's something that we haven't been talking about since mid-April a whole heck of a lot. I think a lot of these CEOs, when we talked about price increases because of inflation related to tariffs, a lot of these guys who came out, and I don't think they thought they were going to get their heads chopped off by saying we're going to have to raise prices. We just went through a bunch of retail stuff. Target, which is doing worse than any other retail we can think of, right? They basically say, oh, we're going to leave prices. We have other, this is what Cornell said, we have other levers to pull to keep prices low. Guy, do you believe that Cornell has other levers?
I mean, I think listen, I mean, I'm not looking to pick on Brian Cornell or Target, but I will tell you that this is a stock that has now been more than cut in half since, I think, the fall of 2021. Don't at me if I'm off by a couple months, but there's clearly something going on. No, they don't have other levers to pull, and they had the benefit of watching Walmart reports saying what they said, and then seeing the aftermath of Walmart saying we're going to raise prices, and then the wrath that was incurred. So they're not going to make that mistake and say the same thing. And you know what? Good for them. But the reality is they don't have any levers to pull, and that's been playing itself out right before our very eyes in terms of the stock performance or lack thereof, which, by the way, leads me to something I think everybody should be watching as well, because so much in this country is predicated on the home sector, right? The real estate market, the home market, how robust it is and what higher interest rates could potentially mean and what potentially higher unemployment rate means. Look at the XHB over the last, call it 6 months. This is something that made an all-time high in the fall, north of 126. As we're sitting here, yes, we have bounced off of levels that we saw in early April of about 84, but seemingly the home builder index and the home builder stocks are rolling over. I think this is something that people should absolutely be paying attention to.
Yeah, you know what else helps make that case? So Home Depot reported earnings just a few days ago, right? And the stock gapped up. It traded almost as high as 390. The stock is trading at 366 right now. So not only has it reversed that gap move, but it's gone on and filled in the gap going back to, like the pullback of the Chinese, reciprocal tariffs or whatever. So like mind the gaps here, people. You just mentioned Apple, similar sort of situation. It's filled in that gap going back to, 2 Mondays ago. A lot of things are not acting, or at least they're losing steam. Some of the excitement about this 90-day pause with China, because I think it's really important to remember we don't have a deal with Mexico. We don't have a deal with Canada. We don't have a deal with EU, despite I think there was some rumblings of, a formative or something that's going on there. And which leads me to, one area that actually is acting well, and that's the Google. We talked about their user conference IO yesterday at this time. We were talking about a stock that opened up 2%, was trading up 5%. It's been a massive underperformer relative to some of the other generative AI names. Well, Guy, we're recording this 20 minutes after the opening on Thursday morning. Google's up 3.5% right now. So there is money finding areas in which that maybe they just get underappreciated or, whatever the hell it is. If you can come up with a good story that changes the narrative of what's been prevalent in the market, I think Google's a great example of that. I think Microsoft's also a great example of that, trading up, today 1%, very near its prior all-time highs from mid last year.
Before we get out of here and move on to Packy, what's not trading up is crude oil, and OPEC's talking about another output hike this summer, specifically in July. And this, to me, is be careful what you wish for, because I know most people listening obviously want crude oil prices to be lower for obvious reasons. But I don't think what a lot of people understand is the move in crude oil is not necessarily going to be commensurate with the price of gasoline, and that remains to be seen. But at a certain point, lower crude prices really start to hurt some of the U.S. producers, and we're getting precariously close to that. So crude oil continues to be a story worth watching. The energy stocks along, a myriad of different industries have not traded particularly well. And there's going to be a real line of demarcation where crude goes too low and then the market starts to get concerned.
Yeah, one of our loyal listeners, viewers, Guy, Ballroom Blitz, you've probably seen him hit us in the
Sure.
past. He sent me a photograph the other day by email. It was Chevron. It was like, the pricing sheets that you pull into a Chevron, you see what's going on. All right, you ready for this? It was regular at $5.75 a gallon. Okay, so he's in the Pacific Northwest. I'm not going to dox him, okay, but you can then you had plus at $5.95 a gallon. You had Supreme at 16 or 6.15. Okay. He sent this to me. I was like, dude, like that's Photoshop. You know what I'm saying? And I went to the Google or went to Perplexity. And I said, what is the average gallon of gas cost in America? It was $3.15. So we've had all this conversation about price gouging and inflation and, input costs and, what it means for consumers. And you just said it, gas is on the top of most consumers' mind, right? Like, and I said to him, like, it's Photoshop. He said, no, that's it. I
No,
went
it's
to that
true.
Chevron station. So when you see that in a part of our country, and AAA has this kind of heat map, you know what I mean, of pricing. Go check that out. It's kind of interesting. It would not take much to get crude oil back nationally above $4. And then the question is, what does that mean for consumers? We've already seen consumer confidence really get to like multi-year lows. What was that 50.2 print last month? I mean, that's a real low. Small business confidence, real low. Now, I want to say something right now. I mean, I'm not pounding the table like I think the economy is about to go into an R. Like, you know what I mean? I don't even want to say the full name. Like, I'm not an economist. What the hell do I know? You know what I mean? But like, if the rhetoric gets dialed up again with China as we get to midpoint of this 90-day thing, and we don't have substantive deals with some of these other big trading partners, I mean, you might see these costs going materially higher, and that's the thing that, the stock market is not appreciating, but you're saying that the bond market is.
Yeah, it definitely is. And before we go to Packy, I'll say this: this administration, but all administrations do it, by the way. They pick and choose what they're going to look at, but what they're looking at when they say that gas prices are lower are not gas prices at the pump. It's the futures prices in the futures world, in the commodity world that we talk about, and the two do not necessarily trade in tandem. So you could see gas prices in the futures world, in the commodity world at one, and then what you're paying at the pump is entirely different, and you're going to continue to see that. But that's neither here nor there. What is here and there, as you said, the bond market. You absolutely have to continue to watch this. I think you're going to hear more and more people start to talk about the bond market in a concerning way, and I think Japan is going to be a story that nobody but us seemingly has been talking about. The more and more people are going to start to come around to, Dan.
Yeah, no doubt. Again, you and I were saying this yesterday. We thought 18 in the VIX was probably mispriced. If you look at that move index, keep an eye on that if it's not something you're focused on. I mean, one of the things that I find interesting about that, more about the Japanese bond market than I'll ever know. And I just mean that sincerely. It's not something that is, I have too much acumen in. But the fact that, we're seeing yields do similarly there, what they're doing here. And usually we focus on the differentials, right? That is something that I think, to your point, I think you have to pay attention to. Find someone smart who knows about it and figure out what that means for U.S. risk assets and the like. And I'll also say the thing in Bitcoin, unless you're long it and you're enjoying these gains, it should be slightly worrying about other things that you own outside of crypto, in my opinion.
Agreed. When we come back, Dan's conversation with Packy McCormick.
All right, welcome back to the Risk Reversal Podcast. I'm Dan Nathan. I'm joined by a very special guest. He was one of the first guests on the old OK Computer podcast. It is Packy McCormick. He is all things not boring. Packy, welcome back to the podcast.
It is so good to be back. Thanks for having me.
All right, man. This is kind of fun because it's not kind of fun. It is fun. Like I said, you were one of our first OK Computer guests. You were also, I think, in the beginning of On the Tape, you were also one of our early guests. I came to know you, the predecessor of Not Boring. What was it called?
Per my last email was like the newsletter before Not Boring. It was kind of Not Boring from the beginning.
Okay, fine. I'm sorry. All right. What is Not Boring now in mid 2025?
Yeah, Not Boring is newsletter where I write about tech companies. About 250,000 subscribers, a little less than that, and a fund, Not Boring Capital, where I invest in a lot of the types of companies that I write about.
Yeah, and that's something that you've been doing now for years, and you were a very influential writer on Web3, and we can go into a whole host of, the posts that you read. When I say influential, I mean you used to move some of these crypto things by doing deep dives. Is that fair to say or no?
I got interested. I always think of myself as very kind of average Joey on things where maybe I can see things as they're about to inflect a day before somebody else. So I get interested in things that I think were about to do well. Yeah. But yeah, there's
you had your finger on the pulse. You were never like a laser eyes kind of guy. No. You weren't all into the crypto punks and the bears or whatever the hell. What are they, monkeys or something?
Yeah.
Apes.
The bored apes. I thought and still think that it was fascinating. And it's funny looking back on a lot of that stuff. I wrote about Solana and Ethereum, and I wrote a bunch of pieces about crypto, and I got dunked on for a lot of it when things went south. Totally fairly. And I think now the really interesting thing that is happening is, when the markets were volatile recently, for the first time, I was like, you know what? I'm actually just going to move a lot of my QQQ or TQQQ, if I'm being honest, into Bitcoin because I feel a lot safer in this asset. And it's finally doing what it's supposed to be doing. Stable coins are on an absolute tear, and everybody wants a piece of stable coins, and they're incredibly useful.
I want you to explain that a little bit for our listener, because we've kind of, not that we don't like crypto or talking about crypto here, and I know that crypto meant something kind of different back in 2020 and 2021. And I think that what's happened now is, to your point about stablecoins. Stablecoins were one of the first sort of things to blow up, right? When you think about Tether and some of this other thing. But now it seems like that's the thing where if you are a scammer, you're really interested in the stablecoin market. If you are legitimate trying to build out DeFi, that's a main pillar of it, right? And so,
but way more now, right? So I think the big thing that happened, stablecoin volumes kind of even throughout the bear market kind kind of started to pick up. You had people like Tyler Cowen writing about how stablecoins were becoming useful. A bunch of kind of financial institutions were starting to get interested in them. Essentially, they're just programmable money. They're digital dollars that can go cross-border without fees, that are just more frictionless than working within the banking system. There are things that are good and bad. You need to add on top of that all the protections that you get in the banking system, but they're this like unbelievably smooth primitive for moving money.
You know what's really though smooth is like when I go to Citibank, and if the number is like $50 or if it's $50,000, like paying $17 to Citibank to have it wired and show up like within, I mean, that's what I don't really understand. You know what I mean? Like in America, we don't have a whole heck of a lot of friction, right? We have sometimes like some junk fees and stuff like that, but like the bigger account you have, the more important customer you are, there's really not a lot of friction.
There's not a lot of friction in some cases, particularly if you're an American trying to send money in America. And I think like there was a whole narrative around stablecoins that they were like just going to be good for cross-border payments and remittances, and that was the big narrative around them then. I think since then, so the big thing that happened with stablecoins is that I guess it was 6 months ago at this point, maybe a little bit more. Stripe announced that they were acquiring Bridge, which is a stablecoin infrastructure company, one of our portfolio companies, for $1.1 billion. And Patrick Collison in the announcement said that they're the high-temperature superconductors for finance, meaning that they're just these like kind of smooth, frictionless payment rails. Yesterday, Ben Thompson wrote a piece kind of talking about what happens to ads in the age of AI when instead of SEO and trying to capture human eyeballs to get them to buy something, you have agents going to talk to each other. And Ben Thompson, who's never been bearish on crypto or never like totally dismissed it, but has never been its biggest advocate, was kind of like, look, honestly, to get agents to transact with each other and to kind of remake the open web and make the web better, the thing that all of this is going to run on is stablecoins, agents interacting with each other. Like they have
but why couldn't agentic native AI work on the US dollar? That's what I don't understand.
Try to get your agentic AI even a bank account, right? Like it's not a human being. You can give it a wallet with a certain number of dollars in it with, programmable. It can spend X on this. It can spend Y on this. I don't know about your Citi account, but I would imagine you'd have a hard time kind of programming your Citi account to say like, here, go let my agent.
But no one's going to do this. Give me like the over
ton of people.
No, not in 2025 or 2026 or probably even 2027. Like agents are all about trust. And if you think about how long it took for people to trust putting their credit card into Amazon or eBay or something like that, like I just don't believe that a financial institution that has so much regulatory oversight, and then you put that together with basically people and just like the way in which we do things, I think I'm taking the over on all of it. But it's interesting to me now you are moving some of your NASDAQ. And I've been talking to you for 5 years, and whether the market was up, the market was down, you were always buying the QQQ. And I think this is a pretty good segue about a lot of the stuff that you've been writing about. I think the through lines have existed for 5 years. It's about innovation. It's about those kind of, really hunkered down and not thinking about next quarter or a year from now, but thinking 5 years from now. And this is a good example, I guess, of Stripe, what you're just talking about. This is obviously a massive private company that has no intention, not in 25 or 26, of going public, but they are doing some things that are really, they're thinking out 5 years and stuff like that. So give me a sense for how you're thinking about technology as a whole right now, because some of the hardest hit stocks in this like little bit of a shakeout over the last few months were like the ones with the biggest moats. They're basically near monopolies. They have the best managements, all that sort of stuff. So how are you thinking about it right now as we're like really within a few percent of the all-time highs?
Yeah, I mean, it'd be good for everybody in VC if Stripe and the rest went public, but at the same time, they can buy a stablecoin company when people are like, what is going on with crypto? OpenAI just announced they're buying Johnny Ive's company for $6.5 billion, which as a private company, you can just go do that as long as you have liquidity, and people are more than happy to give them capital to go do things like that. And so I can see the argument for them staying private. I'm still in my second biggest holding now is TQQQ as opposed to my biggest, but I moved a chunk over to Bitcoin just for safety.
Just explain what the TQQ is.
This is not investment advice, anything that we say on this podcast, but it's triple long NASDAQ, and it's in Composer, which is the investing software that I use, and it switches back and forth. And if things get oversold or overbought, then
it's an algo that readjusts your portfolio.
It's an algo, like it's very very simple.
I got to check out the Composer. That sounds really cool.
Full disclosure portfolio company, but I like it's where I put all of my kind of public equities because I'm not a good trader, and so it'll just switch me back and forth. The one trade that I did make was just getting out of anything that I thought could go down 50% in a day, around Liberation Day. But still very, very bullish on NASDAQ and technology long term. And I think there's a bunch of different ways to look at it. I was talking to a portfolio company that's working with a lot of the Fortune 500 on AI stuff last week, and just hearing the numbers that they were ripping off in terms of what companies were both making and saving by using their product. And this was a private conversation, like not a sales pitch at all. It was the first time that I was like, wow, I should probably actually just buy the S&P. Like the margin profile in a lot of these companies could improve significantly if you can do more with
what sectors
with
in particular do you think are going to be like positively affected right away, like within a year or something?
This is I don't know if it's a year or 2 years that it actually starts showing up, because I think there's a lot of experimental budget that companies are playing with right now. But this was broad-based. They were talking about like CPG companies and kind of big food companies all the way to the financial institutions. Or
when you go financials, insurance, some industrial processes first before like CPG or because is that logistics? Like, you know what I mean? Not to get too bogged down.
Is like just very specific stuff. Like they have a team of 100 people who are doing marketing stuff on a certain product and like watching their Amazon pages and seeing how they're positioning against competitors. And all of a sudden this thing can track all of that for you, write the own copy, change up your PDP so that it's more competitive with your competitor, and increase sales, and do that with a tenth of the people that you normally have. That to me, I think is probably where the impact shows up first, in this like broad-based, small, like maybe you're talking like a point of margin kind of way, that the next time you have to go out and hire, you're not hiring those 10 people, but you're just doing more with the people that you have. That one to me just feels like a good for kind of the whole market, kind of thing that the companies are just going to get more efficient and smarter there. I also think, like, and this is me probably being over optimistic about kind of young tech companies and the nature of my job and what I write about and what I do. I think this is like an unbelievable time for companies that are newer to take over kind of the incumbents and to jump up.
Yeah, so you had a post about that, and why don't you just you want to run through that a little bit, because I think that is the story of innovation. I think it's the story of the U.S. economy for the most part. If you go back 100 years too, I mean, I think some of the stuff then wasn't as sexy. It was probably pretty sexy when you were going from the a horse and buggy to just the Model T or something like that. But it just seems like there's so much now, and it's happening so quickly. Even if you go back 25 years, even during the internet bubble, it all seems so rudimentary back, like if thinking back now.
Totally. I mean, the way that I view the world, kind of, the history of economic development, this is oversimplified and dumb, but is for most of human history, we innovated in the physical world and we did it slowly. And then that got faster with the Industrial Revolution. For 50 years, pretty much we just built software and kind of forgot about everything else. And I think that's a really, really great thing, because now we're in this period where we're combining hardware and software and giving stuff capabilities that it's never had before. The easiest example would be a Tesla that can update over the air. And I know we have differing views on Elon, but like that has inspired, I think, a whole kind of wave of new companies that are going out.
So speak about that, because again, you just mentioned that there's a whole group of really innovative private companies, upstarts, that are set out to disintermediate or disrupt, existing incumbents, which has really been the story of tech. I mean, I think, to your point, the focus on software, now we're getting into kind of real world stuff, whether it's EVs, whether it's rocket ships, whether it's satellites, all that sort of stuff.
Yeah, and I think the point of tech for the past 50 years, largely, like Microsoft wasn't replacing an existing incumbent, really. It was just
they created a category.
Or Facebook, maybe it displaced phone calls a little bit. And
I love
the advertising.
my MySpace page. I mean, like,
if you count MySpace, but it's not, it's not toppling a big. It's like a bunch of these net new things where it's not replacing like the whole SaaS industry, which has made a ton of money, nibbles around the edges and makes a bunch of things more efficient, but doesn't go out and replace companies. For that piece that you talked about, I looked back. You mentioned the horse and carriages and the Model T. There's a picture of Fifth Avenue during the Easter Parade in New York City in 1903, and it's all horse and buggies, and there's one car. And you fast forward just a decade, and that same picture in that same location is all Model Ts and all cars and one horse and buggy. And in an 8-year period from when Ford started producing, or the 10-year period from when Ford started producing the Model T to a decade later when the next kind of census came out, Ford's Model T sales were twice as big as the entire horse and carriage industry in the country. So these things, even then, can happen really, really fast. And even, you know, like Ford famously said, you know, if people if I asked people what they wanted, they would have said a faster horse and not the car. And so you see these things that have been around for thousands of years that are Lindy, that nobody thinks are going away. And then even back then in 10 years, they get replaced. And I think we're seeing that across a bunch of different industries now. So Tesla, SpaceX, doing something very hard, had it easy in terms of the competitive set because the U.S. aerospace industry.
Thanks a lot, Boeing.
Yeah, thanks a lot, Boeing.
Yeah.
Boeing is, I think, emblematic of the type of company. Like, these things just happen where over time you are innovative. Boeing did this same thing to the other airline companies with the jet engine and kind of just won that industry kind of coming out of the war and a decade later. And then you focus on the process, you focus on your margins, you financialize and outsource a bunch of different pieces to the point where you have a really hard time innovating anymore. And sometimes that works and sometimes you can get away with it. And sometimes now there are these triggers where you have AI, you have, I think, better electric motors are a really, really big one. Batteries are a really, really big one. I think the electrification of everything to me is like almost as big as AI. And so now there's just, you know, another maybe example of a Tesla-like company that's younger but still known would be, walking down the scale, like an Anduril, going after the defense primes, but 500 billion or so, 400 billion of market cap up for grabs there, starting to actually, you know, compete for some of these big competitive programs.
And they're actually defining a lot of that new tech as far as like military applications and the like, because like the incumbents, right, to your point, they have to defend their moat to some degree, and they have these big chunky contracts and they're always late, and then they're, you know what I mean, that sort of thing.
They're late, not only are they always late, but they're always late by design, and they make more money when they're late. Because it's a cost plus contract. If you go over time and over budget, you make more money. And so somebody comes in and says, we're going to take the capital risk ourselves. We're going to develop technology before the program's already been announced and kind of guess that this is the way that the world is going. And we're going to design these kind of like small, cheaper, attritable systems as opposed to these big, exquisite F-35 or, you know, like massive ships, or these things that take decades and tens and tens and tens of billions of dollars to develop. We're going to just design a bunch of stuff that the hardware is nowhere near as robust, but because it's all connected with software, the whole system works together better than some of that does for where warfare may be going. And they came out before Ukraine, and now I think everybody sees that that's where warfare is going. And that's just not something that you can easily do as you know, a Lockheed or a Boeing is say, okay, great, we're a software company now that is doing a bunch of small things that all work together. First, good luck hiring the software talent that an Anduril can hire. And second, to your point, you're just never going to give up on those big contracts. So this stuff doesn't happen overnight, but you know, you see a program like Golden Dome, whether it happens or not, you know, like there's going to be $1 trillion kind of up for grabs for American-made products that are kind of net new, and so there's going to be a bunch of activity there.
You remember when Tony Stark came back from, I think it was Infinity or one of the final ones? He said, "I wanted to build a dome around the Earth." Yeah. I was thinking about that. That was probably like a $25 trillion project. That was really stupid, but. Don't laugh at me, Bill. I'm just saying, when he said the Golden Dome, I just thought about it because I just saw I watched those Avengers movies every time I'm on a long plane ride, and they're always on like the choices. So I really love them. I was really late to all that stuff, the MCU.
I have not gotten deeply into the MCU.
You were like the new tech guy. Let's go back to Tesla for a second, because this is one that's like, I'm curious how you think about this. Was it disruptive to the auto industry? Because like last year in 2024, like 12 million, you know, internal combustion engine cars were sold in the US. Last year, Tesla sold 1.8 million cars. Half of them here in the US.
Yep.
So you can do that math, and you could say, well, you know, we also have GM, we also have Ford. I used to have a Mach-E that I loved. Okay, we have the Germans selling EVs here, that sort of thing. And you start saying to yourself, I don't know how disruptive is, and I don't know how innovative those cars are anymore. And yes, you're excited about over-the-air like updates and that sort of thing. But if you like get into a fender bender with your Tesla, good luck trying to get that fixed in a week. I mean that sincerely. So like I think about it, and you know how many cars they're supposed to sell this year? 1.6 million, down from 1.8, and then it's down from 2 million 3 years ago. And so I say to myself, I don't know how disruptive is. And then I think about the CEO, which we could all agree, what the best thing that he did about EV, and I know you're excited about electrification and stuff like that, he really pushed for that to disrupt the initial, like but I don't know if it's working, because he also went against some very simple principles of economics. He thought there was price elasticity, right? Based on when there was started to be a trade war, or a price war, I think in late 22, he's like, well, let's lower the prices. We'll gain market share. We'll then, kind of topple some of our, and it just didn't work, because the pricing got killed. And then all of a sudden you see the rise of BYD and some of these others. And I think Tesla, they're screwed from an auto standpoint. And I think that's why he's saying, don't look over here, look over there. Have you seen the robots? Have you seen the robo-taxi, that sort of thing? And I got to tell you, robots, I'm taking the over, and the cyber cab with 2 seats, yours. Like I don't, you know what I'm saying? All right.
There's so many good points in there, right? Like one, I don't think that Anduril in 5 years is not going to be the only defense company. They'll all be there. The defense budget is going up, and so there's just room for somebody else on top. My thesis is more, faster growth, better margins, sexier.
Well, hold on, Tesla.
We're talking Anduril.
Oh, I'm sorry.
We're talking Anduril.
Because Tesla's margins are below that of like traditional autos right now.
Yeah, but
sorry.
No, we're talking Anduril, where your margins are, the incumbents' margins are locked because they're doing cost plus, and Anduril gets to earn bigger margins to the extent that it's able to deliver on budget. But Tesla is really interesting in a bunch of ways. So obviously it's the most valuable automaker in the world, and we have the meme conversation, and maybe it's just the longest lived meme stock of all time. But it's worth twice as much now as the entire auto industry, or the top 12 companies market cap was, twice as much as all of the auto industry's market cap in 2003 when it was born. My favorite example of kind of new versus old here is during COVID, when there were the chip shortages, all the incumbents, Ford, GM, Chrysler, whoever, cut production dramatically, took $2 billion, $3 billion write-offs because they couldn't produce cars because they couldn't get the chips. Tesla, because it owns the full stack, rewrote all of its firmware to be able to use fewer chips, and actually doubled its production over the next year or so during COVID. And so there's a speed advantage there, but it doesn't mean that you have to kill.
Well, he also refused to stop production, which a lot of other of the, you know what I mean? So the thing for me, and you wrote this great piece, I can't remember, a few years ago, maybe you'll talk about it a little bit, but how Elon won, which game, the online game? Was it
online game,
the great? It was, honestly, we're going to put that in the show notes, because I fucking loved that. It was so good. And I think I remember thinking, I'm not an Elon fan, but I agreed with 96% of what you said, but he doesn't think the rules apply to him, right? And that's one of the reasons why I think he's been able to be, push to the edge some of these sorts of things. But at the end of the day, we have a rules-based,
There's
structure.
Rules-based stuff, but people were allowed to go into factories and do all of that, and they would have shut down Tesla if he was breaking the law there. It really was. I was going back and rereading all the articles from the time. It really was all the big automakers saying, look, we can't get chips and we can't make cars without chips. And Tesla went back and said, well, we actually control all of our software and all of our hardware. We still import chips, but we can rewrite our systems to be able to use fewer chips. And they redesigned the thing from scratch. Even after COVID, they just used fewer chips in the car because they were able to do that. So more nimble there, bigger market cap, even at a smaller kind of market share on the car front than a bunch of other folks. I think that's interesting. On the self-driving cars, I think it's really TBD now that I think Waymo is doing more rides than Lyft in San Francisco.
They just did 10 million paid rides, I think, or something like that.
And it's amazing.
Have you ever? Oh, they're awesome.
They're I got into an Uber afterwards because to leave the city, you have to get an
jail
Uber.
Fenced,
and I really felt a little bit nauseous driving in the back of the Uber coming from the Waymo. It was a smooth ride. There's a lot of people who think that Waymo is the right now solution, and that actually Tesla, and this is not just Elon fanboys, but that by using kind of cheaper hardware and better AI and having cameras and having being able to use kind of normal cameras as opposed to LiDAR and all of that type of stuff, that over time that advantage kind of compounds, and that you'll see the same thing that you see in the LLMs, that just data and compute end up winning. And so maybe they can do that down the line. If robots are big, you steal a lot of the stuff from what Tesla did. You steal a lot of that expertise and put it in robots, and a lot of the stuff that you need for self-driving, like it all kind of fits together. Like maybe we wake up in a decade, and Elon could screw all of this up. But maybe you wake up in a decade and it's worth $10 trillion because now they're selling 100 million robots and everybody wants them and they're getting cheaper and it makes all of their
I buy
products
that.
better.
I guess my point is I'm just going to take the over on most of that stuff. Like the fact that is literally $1 trillion, meme stock, and so many folks really believe it's going to be the first 5 trillion or whatever. Like, yeah, if robots take off, if he redefines, if Uber goes to zero because what he's been able to do, on that front, I just don't believe that the cyber cab and the way that they are doing, that relative to a LiDAR. And again, I'm not a technical guy or anything like that. These things have to scale, right? And I would see that, like, okay, if you're going to use AI and you're going to use cameras, like that probably scales to the point, like what you were just saying, the way that they've been building EVs much better than Waymo having like $100,000 of equipment on these cars. Like
and the OpEx of having to keep buying updated maps. And like anytime there's like, if you just have a camera, you just drive kind of like a human, you see what's going on. If you don't,
unless it's dirty in front of it, unless it's snowing,
it has been so funny to see like that these are very susceptible to just pranks because there's no driver in it, so you can like put a thing in front of it and it just won't drive anymore.
Right.
Like, so there are plenty of things to work out. I just think it's a reasonable approach. I doubt the cybercab is going to be the final form factor, but the Teslas themselves can like mostly drive themselves.
Yeah, but
now.
He says ridiculous things. Okay,
of course.
So no one wants to own the fleets of these things, right? They're depreciating assets. They're, there's companies that have been born out of just buying like 100,000 Teslas from Hertz and then renting them out at usury rates to, folks. And then those guys are barely making a living driving Ubers. You know what I mean? Like, it's really sad. Have you ever talked to these guys? Like, some of these guys pay $800 a week to rent cars, and the first $800 of the that they earn on goes, right to these fleets and stuff like that. So when I hear Elon talk about, well, if you're a consumer and you own, a Model 3 or Model Y, you're going to be able to put it in the cyber cab network. Well, you've done Waymo. I was just in Atlanta actually, and I know they haven't rolled out in Atlanta yet, but I saw this whole depot and I saw a bunch of the Waymos, what are they? The whatever the trucks
Jaguars,
are. Yeah, the Jaguars. And I saw them all lined up, and you can look at a depot. You need electrification stations. You need people there to clean them. You know what I mean? All that sort of stuff. I mean, it's not like, like you just like open your garage and let the Model 3 just roll out. You know what I mean? Like, it's going to be really complicated.
Totally.
Yeah.
I don't know. I don't have a strong view on the taxi or the Uber-like business itself, as much as self-driving is going to be cool and I want to have a car that drives itself. When
it's funny, you don't even hear about FSD anymore. Like, one of the reasons why the stock went from 250 to 500, the whole idea was that they were going to get quicker to FSD. Right now it's supervised FSD, right? And then they're going to be able to sell that for $10,000, and that's pure margin for all intents and purposes on the cars. And that's how you go from, 13% auto margins back up to 25 where they were just 2 or 3 years ago. The only problem is your biggest competitors outside the US, BYD, are giving it away for free.
Yeah.
You know what I mean? So FSD, not particularly interesting in my opinion. So you got to get to robots and you got to get to cybercab. You know what I mean? And so my question to you is, with $1 trillion market cap right here, with, auto gross margins in the shitter, with growth just halted, they're actually, like deliveries are going down.
Yeah.
Would you buy the stock, not investment advice, right here for 5 years out, thinking like Ron Barron or Kathy Wood, like they think this is going to be a $10 trillion company?
That's not.
It's not what you do.
That's not what I do.
Yeah. But you get asked, you sit around and you talk to a lot smarter people than me on tech. You know what I mean? A lot of people are all in.
I think it's like pretty fully priced. I don't know. I think you're probably paying for a lot of that, that stuff coming true. I hope that all of it does, and I hope it becomes more valuable, but
Right.
I don't have a strong view on Tesla.
But you're also, your point about the piece that you just wrote is that there's going to be some amazingly innovative companies run by people who have been inspired by Elon, who are set out to disrupt that company.
Yeah, I think it's that company, although people in the US at least have been scared to go, do a Tesla competitor directly. We've talked about Rivian before, and super cool product, but it's not going it's going for a different piece of the market and not trying
What piece of the market? I'm just curious, because it's still a high end, and we know that like Tesla, for instance, less than 5% of their sales now are the Model S and the Model X. You know what I mean? So they are literally mass market, but for some reason they can't go low end. You know what I mean? They don't have a $25,000 car. Rivian this is totally anecdotal. I was out in Boulder visiting my brother over the weekend. And this is a great story. I think I told it already on a different podcast. So my brother lives a block away from Elon's brother, Kimball. And in his front, in his driveway, he's got 2 Teslas, and they're both Model S's. I think. I'm not trying to dox him or anything like that. But like 2 doors down, a house that's just as nice as Kimball's, there's 2 Rivians in the driveway. Like, that's a pretty good flex, right?
Totally.
And I saw a lot more Rivians, again, purely anecdotal, in a town like Boulder, pretty liberal. This is probably one of the towns where Etsy's sending a lot of those bumper stickers. I bought this, Tesla before Elon went crazy, sort of thing.
Yeah.
But we did talk about Rivian a few years ago. You wrote a great piece. You came on CNBC talking about it pre-IPO, and you weren't making investment advice, but you made the argument why this could be one of the first real competitors to Tesla, and it's a good car.
It's a great car. It's a hard business. All of the above. I would probably drive a Rivian. I mean, certainly over a Cybertruck.
Yeah.
If I didn't live in the city and had somewhere to actually plug in, I have to do an ICE because we don't.
It's hard. I bought the Mustang Mach-E a couple years ago. I loved it. It's a great car. It wasn't me. It wasn't my, sort of thing. The biggest problem I had was range and charging, and so the city right now is just not set up for tens of thousands of, EVs. So that's a problem in places like this, especially when you're paying $800 a month just to park your car in the city.
But imagine when it can drive itself to Jersey City, plug itself in, and then pick you up in the morning.
Well, I hope I'm around in 2075. so when that happens, you know what I mean? But, we don't have to get bogged down. I get bogged down a lot in Tesla. These guys know that. But I just think it's a really interesting debate because I meet so many smart people, whether it's in public markets, clearly in the VC space, and then just entrepreneurs in general. There seems to be everyone's convinced that, he's the guy, he's the golden god and this and that, whatever. But there's going to be another guy who comes along, or gal for that matter, who's just kind of less crazy. And but the thing is, so many people love the crazy.
But I think you can be because Elon exists. I think the thing that I think is probably underrated still, even if you appreciate Tesla and appreciate SpaceX, I think the thing that's underrated is, one, how many founders are just inspired by the types that I'm talking to who are trying to build these kind of big physical things and complex systems, inspired by SpaceX, and how many have been trained at, SpaceX in particular, Tesla to a lesser extent, but how many people now are going to attack every piece of the economy, kind of using what they learned there, where you don't actually need to be as crazy anymore to be the one who follows kind of Elon breaking through. You have to be a little bit of a promoter and all to raise money for this type of, he almost went bankrupt personally for a rocket company.
Well, that was in the Ashley Vance book. It was amazing. He had a handshake deal, I want to say in 2013 with the Google guys because he couldn't make payroll.
Yeah.
I love that about him. You know what I mean? I love it that he's willing to put it all on the line. And he also said something really interesting. On the January call, which was the Q4 call, and the stock was trading horribly. I mean, it was like maybe $200 or $220 or something like that. And a lot of folks were asking, or at least one analyst asked him about his time and how he's allocating it and this and that, whatever. And he said, well, I think he said, I'm paraphrasing, obviously, he's built great teams of all these companies. A lot of folks were kind of worried about what he was doing during the transition and how much time he was going to spend. And he said, I go to where the problems are.
Yeah.
And I thought that was a really interesting thing, but we've never seen a human being who presides over so many important things, right? And you could say that, Tesla is an important company largely because it's market cap, largely because all the stakeholders, largely because what he's trying to, disintermediate or disrupt. And then you think about SpaceX, Starlink, X, XAI, Neuralink. Am I missing any here? You know what I mean?
Boring Company, yeah.
Boring Company. Is that where Not Boring came from?
No,
No, did you?
Somebody did make me a hat with the Boring logo with a knot and not on top of
Well,
that.
Boring Company seems like not a real company for whatever it's worth. Like the whole tunneling thing, it doesn't seem particularly interesting. Remember he was selling like flamethrowers on Boring? You literally could buy a flamethrower.
Was that on Tesla.com or was that?
It might have been.
I think that was a Tesla.com thing. I mean, to your point on him going to where the problems are, I went out and visited SpaceX a couple of years ago and was talking to one of the engineers there. It was like, this was in the middle of the Twitter thing.
Yeah.
And so he's like, Elon hasn't been here as much, but he'll fly in, after 2 weeks gone into a meeting with the world's top rocket scientists and tear them apart and get to like the core of their issue. And I think that's how he's able to gain so much respect from
It's funny. I'm calling bullshit on that. And I know you heard that direct from somebody who's there.
I heard it from multiple people.
I think for every one of those people, there's probably 50 people that worked at his companies that would say something very different. I mean, maybe I'm wrong about that.
I think so. I think you are actually. I've talked to my job now.
You think I'm
is
wrong?
Talking to a lot of these people. And
that could be.
Yeah, I think a lot of them.
I mean, it wouldn't be the first time.
There's plenty to criticize. I think that the people from his companies are incredibly bought in on the mission and understand how insanely difficult it is and have respect for his ability.
It's funny. I was talking to a very senior guy at Facebook. He's pre-IPO Facebook. And I was asking him about Elon, and he basically said every one of his companies has essentially ring-fenced most of the major decision-making away from him because they don't have access to him. And to your point, he'll fly in, he'll do that thing. He's the crazy genius. He'll pinpoint the problem. And then it's like that scene in Jerry Maguire, when he's like gets fired and they're trying to get all his clients and he walks out, he gives this huge speech. Who's coming with me? And, the goldfish. And then everyone stopped. They've been there for 2 minutes. They're listening to his rant. He gets in the elevator, the doors close, and everyone just goes back to doing what they're doing. You know what I'm saying? Like, but again, we don't have to get bogged down in that. And maybe they'll cut this whole bit. I don't know.
Yeah.
But, all right. I want to we've been going for a while here. What most interests you right now? Like when you think about this, you've had this amazing purview, I think, of what's gone on specifically in the private tech markets, disruptive technology. I know you talk to a lot of brilliant builders, investors, both public and private markets. Like what drives you each day? And again, this is important. You do deep dives, you research stuff, you invest in the companies, that sort of thing. Yeah. So what are you most focused on right now?
It is this trend. So I mean, I think the most exciting thing about this time is that there's not just like, cloud or mobile. There's like 12 different things that are all happening all at the same time that people are able to just kind of pick and choose from as they're building new things. There's a 4-minute mile effect from, SpaceX happening and then Anduril starting to make progress against incumbents that are making people go out and kind of build things in all sorts of categories. To me, that is the most energizing thing in the world. Like I sound super cheesy when I say this, but like my passion for this stuff has always been the intersection of the business model and the technology.
Yeah. Why is that cheesy?
It sounds very MBA to say my passion is at the intersection of business model and technology, but I do think I think there's some unbelievably cool sci-fi tech happening that has no business model to support it yet. And that stuff is really cool. We write about it every week. We do this weekly dose of optimism where we talk about just the cool science and tech stuff happening. And that stuff is awesome. But what gets me excited both to write about as an investor is how is this changing?
By the way, you mentioned Ben Thompson before. It's one of the first things I read every morning, Stratechery.
Yeah.
And, he's got a lot of passion about what he does. It shows in his writing, but you actually go much deeper. He's one of the most brilliant guys in technology. I mean, he's forgotten more than 98% of the people who are, practicing in his space. And the fact that the other day, Jensen Huang was on his podcast, and he's writing about it. I mean, the list goes, Satya was on, I think a few months ago. I mean, it is pretty amazing. I love your passion. I think you do. I've noticed on some of your pieces now you're starting to do TLDRs, you know what I mean? Because they're deep, man. And once you get through what you think is halfway through, then it keeps going and going. But that is passionate. You couldn't do that if you weren't passionate about the thing. I've written
deep dives
because you don't get paid by the word.
No, I should. I've written deep dives on 2 companies this year. Meter, which is kind of, think of it as like modern Cisco, fully vertically integrated. That was a 25,000 word piece. It's like 100 pages. And then Base Power Company, I wrote about for the second time, and that was like 15,000 words. I think Base, by the way, is like the perfect example of this. One of the co-founders, Justin, is ex SpaceX. They're building residential batteries in Texas, and we can get into a whole long conversation if you
All
want
right, so
to.
Base, and what was the other one?
Meter.
Okay, we'll put them both in the show notes because, again, like, think about this. If you don't know who Packy is, you're listening to this podcast, and you're always looking for new stuff, what's the next thing? You got to start reading them. You got to start listening to this podcast, and I mean that. I felt this way for like 5 years.
Thank you.
Before you got to go back to that, the Elon winning. Which one is it?
The Great Online Game.
All right, give us the TLDR on that one, because I feel like if anything, 3 or 4 years later, it's probably more true now than it was then. Is that fair?
It is, but I like it less now. Like I don't
really?
necessarily. I mean, I like the piece. I think it was like it caught the moment in time really, really well. I'm not like as bullish on spending so much time on the internet. Like, this was written in the middle.
Well, I don't think you were making the case why, why you spend so much time on the internet, or why it's,
The argument was really, this was like kind of around the time we were emerging from our homes, but like still people spending a lot of time online, spending a lot of time on social media. And the argument was really, we live in this wild world now where like you can hit certain keys on your keyboard and like kind of win the lottery. And not just like, now I think one of the reasons I don't like it is because people have kind of figured out this system and hacked it. And now there's just so much engagement farming and just like kind of crap and threads and all of that kind of stuff. But what I love about the internet, and why I called it the Great Online Game, is like, if you put out and put in good work on the thing that you like really, really care about, one, there's like the Kevin Kelly idea of like 100 true fans, and like there's riches in niches, and so you can find people.
250,000 true fans.
I have 250,000 fans, but could I get, how many of them could I get to pay me
That's
$10,000 a year? Who knows? The internet for me at least was this magical place where I could like write about the intersection of technology and business models.
Just tell people, like, in 2020, because I remember you telling me this, you did have 10 fans, right?
I had 400. So I kind of wrote the thing on the side while I was in my last job for a year, but it was like really just a links roundup. And I think over the course of a year, I got to like 400 people. And so the beginning of 2020, it started taking off and got to like a couple thousand. And then it just kind of grew from there. But it was really like, I get to write these long essays on tech, business, and pop culture at the time. And there's people who find that interesting on the internet. And I think, there's a lot of it that was just like, if you do the thing that you like really actually are interested in, one, maybe it'll lead to something, career wise, but two, you're just going to find a bunch of other people in the world who are interested in the same stuff that you are. And it's just like this really magical thing that we all get to be, a part of. So that was kind of the argument. And Elon was in it just because, we talked about the fact that he had just been on SNL. Tesla was doing what it was doing. And it's kind of when he became, in the beginning of COVID, like really became a celebrity. And he was awkward as hell on SNL, but like
it was cringy.
It was really cringy, but became a celebrity and like really became the first person to figure out how you use the internet to like really affect these massive
It is interesting though that these last 2 years, I think, have really taken a toll on the way a lot of folks think about him. Let's put the builders and the engineer, all that stuff out of there. And it's interesting how quickly this stuff can come down. But Trump shows you how quickly you can rise again. You know what I mean? Using the internet in that regard. Well, that's interesting stuff. I want to finish here because I want to. Who really excites you on the internet now? Because there's this woman who came on the podcast a year ago, Kyla Scanlon. Have you followed her?
She's great.
And, she's the one who coined this vibe session. And that was something to me about the economy, you know. And to be very honest with you, I actually never got the vibe session. I don't get it. I think it was like really elementary. And what I'm here to say is, like, you just admitted that there was something that you wrote, and I'm sure there's a dozen things that you wrote a few years ago that you think is a bit cringe or you don't agree with anymore. I bet you, because she's doing such great work now, that she might look back and say, oh, that's kind of dumb. You know what I mean?
Was it I think it was Scott Bessent who said Vibe Session the other day.
Well, I know. So the name is part of a lexicon. I think it's like one of those things. I don't think you mean it the way it was originally meant. You know what I mean? For whatever reason. I mean, that is the thing that she bubbled up on, and now what she's doing on a day-to-day basis, I think is so good. I think she's such a great communicator. And I don't mean to I'm not dunking or shitting on that whole thing. I didn't get it really then, but I got who she is and who she's trying to connect with, and she did make a connection. And now it's just it's done. Packy McCormick 2021. She's just blowing up in a way that is useful to people. Does that make sense?
100%. Yeah, she's great. Have you watched all the TBPN stuff?
No. Oh yeah, I heard that's just gone crazy.
It's gone absolutely
I literally
crazy.
heard about it 2 weeks ago. And just explain what that is really quickly.
So it's a daily kind of live show. These two guys, Jordy Hayes and John Coogan, both friends, both excellent at what they do. John had a podcast, a YouTube channel with 500,000 subscribers, doing these really in-depth documentaries on companies, super well done. Jordy was a founder that we backed actually out of the fund, and one of the most creative guys I've ever met. The two of them wear suits every day and interview kind of everybody.
They're like Lex Friedman sort of people?
No, very
opposite?
short form.
Okay.
So it's it's Twitter based. It's live on Twitter every day. Then they'll put it up on the channels, but they'll just have 5 guests. Kind of, it is modern.
Do they get a lot of engagement on Twitter? Is yeah? Because I'm not on Twitter anymore. I literally don't look at it. I haven't for a year. Really, well, you could probably guess some of the reasons. I just don't find it particularly interesting.
Yeah.
I think a lot of the stuff that goes on there and is not interesting. And I think when I think about Grok, this white genocide thing that was trending last week, and
that was incredible.
Somebody sent me a tweet the other day, and I just went to go look at the comments. I saw the engagement. There was really none. But then there was 10 bot responses.
Oh, yeah.
You know what I mean? And then people are saying that's all that goes on there, and they don't see the engagement, so they don't see the reason why to be on the platform. But these guys are proving otherwise.
They've hacked it. They've done a really, really good.
So you think it's been a hack?
No, in a good way.
Okay.
They they're incredibly likable. They have a bunch of things that almost feel like rituals at this point that people keep kind of coming back to. And if there's a big story happening in tech in a given day,
they're all over it.
The people who are part of that are coming on the show.
Oh,
now,
really?
And they're getting, they had people from, senior leaders at the Army on the show last week. They went live from Andreessen Horowitz's.
Do you think the timing of this, when they think it was the podcast election and all that sort of stuff, in 16 it was the social media election, and then I don't even know what the hell it was in 2020.
Yeah.
But now, it seems like this combination of virality, but also the ability to kind of use these YouTube is a new thing in my opinion for these purposes. I mean, YouTube's been around for 20 years, but
now it's becoming everybody's you must be on YouTube if you want to grow type thing. And they're doing well on YouTube. They're doing better on Twitter, I think.
Yeah.
But
that is likely to change, I would think.
I think the catalog will build up over time, and the algorithm will find it, and all of that kind of stuff. What's interesting though is that the podcast selection stuff was long form, 4-hour interviews with all of the people involved. And this is, everybody comes on for 20 minutes at a time. Yeah. They're doing stories. It does feel, it feels like Tech CNBC is what it feels like. And it's just now something that people have on in the background at the office.
Does it go live the same time every day?
It goes live at the same time every day. I think it's I want to say 11 to 2.
Oh, that's why our live 11 o'clock thing has just gotten absolutely destroyed. No, I'm just kidding. Yeah. All right, so that we got to check out. What are you reading?
I'm actually reading a bunch of if I can find random people writing about different things. I started a mini podcast experiment called Hyperlegible, where I'm just interviewing the people who write my favorite essays of the week. It is, it's going to be audience limited forever, because it's you read the essay, do you also want to hear from the author of the essay? But for me, it's been really, really fun. But trying to have just a bunch of different people on there. There's not, to me, I mean, I love the Pirate Wires stuff. Maybe the one thing that I read every morning other than Ben Thompson is they just have their 3 daily takes, which are short and well written. But Mike Solana, who runs that, is an excellent writer and has pulled together a really good staff. I think Patrick O'Shaughnessy's team has started doing really good stuff with Colossus on the writing side.
They're writing now, because I know that their podcasts have been epic for years.
Podcasts have been so, just really, really, really good. And he's hired a few excellent people. Bree Wolfson on the marketing side, Jeremy Stern as editor-in-chief, who wrote Palmer Luckey, American Balkan, which was like the best tech profile last year. He just wrote a great profile for Colossus, which is their magazine, on Neil Mehta. And I just love the profile for him just generally. And so that's been really fun to watch. On the video side, Jason Carmen has been doing these they started as S3, but now StoryCo videos on tech companies, and now doing these like longer documentaries on different industries. So there's a bunch of good stuff out there.
How do you have enough time in the day? You got 2 young kids, right? I know you're a great husband. That's sort of that, of course.
Well, this is my job, and I that's why I don't like read as many things religiously, but I look for the really good stuff and try to watch it, or at night instead of watching Netflix, I'll watch a Jason Carmen video.
You should watch Mobland if you're not watching.
I haven't.
Mobland.
What's Mobland
it's on
on?
Paramount Plus. It's like Pierce Brosnan, Helen Mirren, and Tom Hardy. Which Guy and I will watch anything with Tom Hardy. It's so good. So check that out. Just put one of these blogs down for 7 hours and power through it. Listen, we don't do Lex Fridman. We don't do Joe Rogan. I could literally sit here and talk to you in this kind of manner for hours. I've always thought you're one of the most brilliant thinkers about new technology. I've enjoyed reading you, watching your stuff. You've been on our pods, I want to say 5 times maybe, or something like that. It's been great. So I really appreciate you coming here. I hope we'll do it more frequently.
Anytime you want. I would love it. I really enjoy these.
Thank you so much, man. I appreciate you being here.
Thanks for having me.